banking has long been a messy mix of silos. Your mortgage here, KiwiSaver there, credit card somewhere else. Throw in multiple insurance policies and it's basically a jumble of apps, websites and spreadsheets. That's all about to change with open banking, which officially kicked off last week. The idea is simple. You own your financial data and you can safely share across banks, credit cards and other providers to get a full picture of your finances in one place. Open banking also shakes up competition. Banks will now see what customers are doing elsewhere. So they'll need to compete harder for better rates and services. However, experts warn security and proper implementation, of course, are key. Ben Lynch is the founder of fintech company Akahu, and he joins me now. Ben, good morning.
Good morning.
Thank you for being on the show, my friend. Look, I've touched on a bit of it, but could you explain in plain terms what open banking actually is?
No, I think you summarised it well, actually, Leah.
But Ben, I still need to talk to you.
Essentially, it is, like you said, it's about putting people in control of their financial data. So, traditionally, all the account information, your transactional balances, even the ability to initiate bank-to-bank payments was held within your bank, whoever, which other colour bank you choose. And so the legislation, as you mentioned, landed on December the 1st, the Consumer Data Right. And so essentially that allows a legislation now, and then open banking is the kind of regulation underneath that says banks must provide access to that data in a secure channel through APIs, application programming interfaces. So you can choose to share that. Now it's purely opt-in, but you can choose to share any of that data with sort of registered and accredited third-party providers. So you might choose to, for example, the days of your mortgage broker asking for bank statements and then kind of collecting them, finding them and sending them or emailing them around sort of disappear. So you can share all that electronically. And then sort of budgeting apps, you might choose to, you might bank with a red bank and you might also have a, yellow bank accounts and you might want to see your yellow bank accounts inside of the red bank's app sort of thing.
Right.
So it sort of does democratise that access and allows you to sort of pick and choose, if you like, where and how you interact with your finances. And kind of as you mentioned, a lot of people might have some everyday accounts over at this bank, but a credit card over here or some other things over there. So you can kind of pull that all together and kind of have visibility in one place.
So you mentioned, the red bank and the yellow bank. So if I'm with ANZ, say for my mortgage, but Westpac, I've got a personal loan. Will I literally be able to see both in the same app? It's under an app.
So what's happened on December the 1st is the banks are now regulated to provide access to the data that they hold about you. So banks have done the work to produce these APIs for their own customers, but the real value doesn't really start to land until banks and other providers become consumers of these APIs as well. So
what's an API again, Ben? Sorry?
So ANZ might, have on their roadmap next year.
No. You said API. What's an API?
API is an application programming interface. So like a developer terms for being able to access this information via sort of code, and it's sort of standardized and you kind of know what you're getting.